If I'm coming in loud and clear, give me a Y. Excellent. Good. Well, thanks for joining us today. Got a pretty interesting topic that we're going to cover today. A lot of people find it. We do about once a year, about maybe 18 months or so. And this is a type of technical trading analysis that's been around for quite a while, but most people have a hard time getting brains around it. So we're going to be covering some stuff. Now we're going to be covering it quickly. I've got a lot to go over today. So what we're going to do here today is Connor's here along with some of our traders, and they're going to answer questions for you. So I'm going to cover up the chat, so I won't be reading or answering questions. I will, however, take a few questions at the end. So if you have something specifically for me, feel free to ask me towards the end of the event, okay? All right, we got, as is usual, we have a whole bunch of people coming in here right at the start. So let's just another minute or so. So where's everybody from? I love seeing where what parts of the world. Hopefully you, if you're in the southeast Florida Panhandle area, you did okay. Oh, Richmond and Charlotte, you guys got some rain, didn't you? Angela's got no rain and hasn't seen rain in. No way. And you have power? Really, from Fort Walton Beach? Wow, you took a direct hit, didn't you? All right, well, let's go ahead and get started today. As I mentioned, I'm going to cover the chat. So if you have questions about what I'm talking about, feel free to ask. Just understand that I will not be answering your question until the end, okay? All right, so that being said, let's go ahead and get started. And again, thanks everybody for joining us here today. We're going to move kind of fast through some of this stuff. So if you've got questions, you might want to write them down so you can ask me later at the end. Most of you know me, but I've been doing this time. We're going on almost 10 years now. That I started out as a remodeling contractor. I was a futures trader for like 7 years, and I was a struggling failed trader. I became a professional full-time trader after having some epiphanies and developing trading systems and trading indicators. So we're going to talk about a lot today, but the first thing that we need to understand is that there's the smart money is controlling what's going on in the markets for the most part. Although this event is largely about measuring volume to identify the smart money moves, we're going to also show you an even more telltale sign of smart money manipulation. Now, who is this smart money? These are generally traders and the better informed traders that can generally move the market. Okay, they're the ones with the big bucks. They're the ones with the big supercomputers. They're the ones that you see happen in the markets for no apparent reason. That's generally the smart money. Okay, so knowing who the smart money is and when they're investing or trading can be a great benefit to us traders, so that we can kind of ride their coattails. And you can usually characterize these guys as high frequency traders, or call them market makers, or institutional funds, quants, HFTs. Okay, all of these are going to be considered the smart money. Now, why are these guys doing it? They're typically doing their manipulations because they know how we react. They're going to manage our emotions because we don't have the ability to do that for the most part. Okay? They're going to manipulate us. Now, we all know this. Most of us are very aware of the fact that there's the smart money is out there, that the markets are manipulated. But we really don't know what to do about it, other than just plain for the most part, and feel that they have an unfair advantage. But to be honest, they create a huge advantage. You just got to know where to look for it. So if I tried to trade against them, that's like trying to stop a freight train. Or usually they're going to be way ahead of you, and it'd be like trying to catch a falling knife. But what we're going to do is we're going to try to trade after them. But we need to know when after them is, right? So that's what we're going to talk about. So who are these smart money guys? The smart money also has all the very nice tools, all these major supercomputers inside or near the exchanges. So these guys can manipulate the markets to create a typical reaction from us retail traders, and that typical reaction is usually going to be something that causes a super panic, and causes us to do something that is generally motivated by emotions. Okay, and our emotions is what typically keeps us from successful traders. You don't know whether you should get in, get out. You get ahead, you think, oh, I could have made a big profit, but now I'm losing money. Do I wait? Do I cut my losses? All of these emotions are causing you to a great amount of stress. I know a lot of us got into trading because we thought it would be easy and relaxing, and all we got to do is learn how. It's very difficult and causes a great deal of stress. So what we're going to talk about is volume spread analysis today. So why are we talking about VSA? Okay, volume spread analysis, or VSA. So we trade the pullbacks. Okay, that's what we do in our trade room. This is what we teach people how to do. This is what it's designed to do. But we have a very specific mission on these pullbacks. We have a sweet spot for these pullback trades. And I'm going to show you how we use volume spread analysis in our trade room to help qualify our most prolific trade setup. Okay. So here we have, let me bring this. I apologize for that. We're doing the best we can under these circumstances. I actually bought a new mic thinking that that was going to fix the issue. I bought a new mic thinking I was going to fix the issue of the mic problem, and it by and large did. But for some reason today, it's come back, and I guess it's because of the number of people we have here. It's part of the limitation of these Slick meeting rooms, so we're on the hunt to different meeting rooms. So I apologize for the bad microphone. We'll see if we can get through this. Connor's in the background telling me when it's gone bad and if something cuts out. So I'll end up repeating, and again, I apologize. So I made a little video here, what it is that we're looking for and what it looks like when you understand and you're looking for the right things when you're trading, okay? So here I've got a chart that's got no indicators on it, all right? And so this is a very typical trading chart. Hold on just a second. Got a very typical trading chart here. All right, and you can just watch this. This looks like any other chart, and it's just any day, and you don't really know with any high degree of certainty what's likely to happen next. Okay, just watching the chart. So let's take this same chart, and now let's add some indicators to it to help us understand exactly what we're seeing. And one of these indicators is our volume spread analysis indicator. Go into a lot more detail into volume spread analysis, but I wanted why we're talking about this. On the left, we have no indicators. On the right, we're showing indicators that we use in the trade room. Notice immediately that we're picking information here that gives us some indication that there's a high probability that something is about to happen, okay? We've got this little dot right here with the number 2 on it, and I'll show you what that means later. This little dot, along with the confluence of these other indicators, has determined that this is most likely a climax bar, okay? Climax meaning it's reached its end. At the open of this bar, we get the signal to put on a trade based on qualifying it with our volume spread analysis indicator. Now you guys see a dot. There is so much technology behind this dot, but we made it real simple to read so that you don't have any gray areas with trading. All right, we know if the dot exists, then a condition exists. No gray areas. And then, of course, this is a very typical trade setup for us. This is called a naked rock star trade setup, okay? And we're going to talk about that more today and mostly more on Saturday, okay? By the way, we have a registration coming up. Connor can put in, I don't know if he did already, the link for the registration for Saturday, but I'll also get that. So, okay, so you're here to learn more about volume. volume spread analysis. Connor's going to tell me where it dropped off, and if I repeat myself, I'll go back a little bit and say it again, so you won't miss anything. Okay, so he'll tell me if the mic drops. So what we're doing with VSA, volume spread analysis, in short, we're measuring the weakness and strength of individual bars. So we're also looking for background strength and weaknesses. So we're always looking for a weakness in an uptrend or a strength in the downtrend. Okay, so this is what we're doing with measuring and volume spread analysis. Okay, but let's lay some foundation before we go much further to the building blocks of VSA. Okay, so the first thing, of course, is to understand a little bit more about the workings of the smart and manipulate the supply and demand, and thus the price of a market. And they're in any market that's liquid. They're there. Okay, so let's take a look at that. So you look at this chart, and you notice that there are certain phases that smart money will go through to manipulate price. Okay, so they don't just do it all at once. Many of us watch and we think, oh, there's stop hunters out there just looking for our stops. And to be totally honest, the big boys don't really give a crap about your that's just one of the phases of this manipulation. Okay, so what are the phases? First phase is accumulation. Then we're going to a markup phase. Then we're going to go to a distribution phase, and finally a markdown phase. Okay, so let's look at this a little bit more carefully. With volume spread analysis, we're not as interested in the overall volume. Okay, so I spend a lot of time measuring volume. And we believe that we can tell an awful lot about the markets by the volume being traded. Okay, and I've lost a lot of money over the years trying to use volume as a indicator to understand what's going on in the markets. Okay, the thing about volume is everybody can read it, and it's easy to read. The big boys know that everybody can read volume, right? The smart money knows that you're looking at high volume areas. We're more interested in volume spread analysis in the type of volume that's flowing through the instrument, flowing through the current bar relative to previous bars over the short term. This is very important. We're comparing, first of all, we're measuring every tick that comes into each bar. And then we're comparing those ticks to the previous bars. That's where the strength is. All right, so let's talk about the accumulation phase. There are characteristics to know, or roughly know, when it's they're in the accumulation. Typically, now the accumulation, okay, this is when the market makers, the big boys, are buying up the available assets that are outstanding, okay, or that people want to sell. So they want to buy them at a relatively low price, but they don't want people to know they're doing it. Okay, this is how they got accumulating these assets, and to accumulate enough of them to where they've really cornered the market on these assets, and they're able to then manipulate the market because they are the holder of all the assets, right? Now they're going to do this very slow and stealthy. It's usually, to you and me, it's going to look like nobody's trading and nobody's interested. Price is kind of channeling sideways, or it's in a lot of congestion. Even though the volume may what is typical? You're typically going to feel like it's a very low volume period and that nothing is going on, okay? Where it's actually price is just kind of channeling, or it's trading in a range, okay? So to you and me, it feels like it's happening, it's boring, nothing's going on. Truth is, the big guys are actually in an accumulation phase. They are buying up all the assets they can as slow and quietly as they can without letting all the rest of us know what's going on. Okay? So we have this chart where, and if you go look at any chart, go pull up a chart on your trading charts. You're going to notice this better on a time-based or a tick-based chart. But pretty much any chart, you will notice this type. Now this is an oversimplified version of it. They're going to go to a lot of trouble to make it harder to see and read. But if you know what you're looking at, you can pick this up on almost any chart. Okay, so we've got the accumulation phase where they're buying. We've got the markup. We've got potentially another accumulation phase, another markup phase, a distribution phase, another markup phase, and then the big markdown. Okay? So the accumulation is going to look like this. All right? So we see this all the time when you're sitting there bored and you don't really have anything to do, and you really wish the markets would start moving so you could start trading. These guys are very subtly accumulating in a very sophisticated and sly process of cornering a huge that market. This makes the following phases possible and worthwhile to these guys. Okay, once they have the large quantity, they can start to manipulate the market any way they want to. Notice that this is in a real tight range, and it's characterized by pretty low volume for the most part. All right. Now, the next phase, markup. You're going to see a series of higher lows and higher highs. Okay. You're going to see price rising, typically on lower volume. Okay. You're not going to see a huge bump in volume, and they can do this because all they have to do is restrict the sales for a while, which causes to go up, which causes price to go up. Okay, so if they own all of the assets and people want to buy it, but they're not selling, what does that do to price? It's simple supply and demand. Okay, so they can create that rising price just by not selling for a while. And they can do this, and as they do this, you're going to see a series of pullbacks after this markup phase. Okay, so all they have, down price is going to start to climb because there's fewer assets available, and then they'll release some, and price will relax a little bit. Okay. Remember I said the prices are rising on low volume so as not to tip their hands, but there's an even better way to tell when price is being manipulated. The rate at which the orders come in is the best way to figure out where these guys are doing their magic. Okay, volume, I found, doesn't help much, because they're going to a trouble to hide that volume. All right? So how can we tell? If we measure the rate, remember those supercomputers? See this supercomputer up here? This supercomputer can put in a lot of orders really fast, relatively high volume, to get those orders processed. So we started measuring the rate of processed orders. And we noticed that there is a rate that is faster than is likely that retail traders do it. And if retail traders aren't causing that, then it has to be the other guys. And if they're doing it, you got to ask yourself, well, why are they doing that? Right? Why are they manipulating price? After we've identified the big boys are doing their thing, we're going to see a big push and then a bit of a pullback, or a reversal. We don't really know. We just know that we have a sweet spot to look for. All right, so the next phase. This is where they make their money. Okay, a lot of us think they're doing the stop hunting and stuff, and that's how they're making their money. Now they make their money the same way that they start selling the exact same way. It's very slow. It's very difficult to determine when they're doing this. Okay, the smart money moves just as slowly through the distribution as they do in accumulation. They don't want people to know what they're doing. This is where they're making all their money. Typically, this is going to finish with an upthrust bar. And there's a reason for that. What they're doing is they're making all their profits on this particular manipulation. They're making all their profits right here. Here. All right? So, they made their profits. They know exactly what they want to get out of it. And now, they're ready to set us up to do it to us again. But before they do that, they need to set the markets right again, right? To where they can just continually do the process over and over and over again. All right, so they do it over and over and over again on markets, but they're still the primary holder of all of these assets, right? They still need to be able to manipulate the market. So they have the larger portion of these assets, and they will stop a little bit in order to cause this incredibly fast uptick in price. Okay? And then, of course, we got our speed ticks here, so we know what's going on. The orders are coming in so fast. And then comes the markdown. Okay, so what happens is that the supply, suddenly they've come out of this phase, the supply, they just dump all of their assets after this big push up, and then they just dump everything they've got to overwhelm the demand. Okay, they have all of this supply that they're bringing with them up here to this high price. They're going to dump it off and start selling it all at once. It's going to overwhelm the demand. What happens when supply overwhelms demand? It's simple economics. Okay, supply rushes in, price drops faster. Many can offload their holdings. Okay. Again, I apologize for the microphone. I hope it's not completely horrible. And then the markdown starts happening. And now they don't really have to do much in this. Once they've dumped all their asset and they've overwhelmed the market at a price that there are not enough people to absorb, down it goes. All right? And they do this to us over and over and over again. All right? It looks like this. Go look at any charts. Now, are we interested in all of this? No. Not interested in most of this. But there's a huge opportunity. every time we get these upthrust bars. Go and look at any chart, particularly a time-based chart, and notice that when price comes out of a phase like this or a phase like this, you'll start seeing some big bars, some bars that are much bigger than the bars that were in these accumulation and distribution phases. Okay, this is where volume spread analysis comes in. We're looking at these bars, the size of these bars relative to these bars. Okay, and we're measuring what's happening inside those bars. So, excuse me, that wasn't the mic, it was my mouth. 3 components to determine the supply and demand. We've got volume, we've got the price spread, and then we've got the close of price. All right, so this is what we're measuring for the volume spread analysis and for our indicator that we call the pullback alert. Okay, so let me show you how this works. Okay, now you're going to hear me talk about looking at static charts. In fact, I'm going to show you something here in a little bit. Static charts or historical charts. Charts that go through every night when you're trying to figure out this trading thing, and you look at charts and you look at these non-moving charts. And you're trying to figure out this whole trading thing that you've been working at for so long and so hard. And you're looking and looking and looking, and you're trying to figure out, how can I find an edge? How can I make this work? What indicator can I put on my charts? So you've got these two, maybe you're looking at a chart, you got 2 bars next to each other that look like this. They're identical. When you look at a static or historical trading chart, those 2 bars, as far as you're concerned, are the exact same thing. But the fact is, using volume spread analysis to identify the type of volume inside each bar gives us the ability to, with a high degree of certainty, understand what's likely to happen next. Okay, so here's the first bar. Let's look at it as if we're watching that bar tick for tick. Are coming in to this first bar. Nothing really special, right? The bar opens and drops a little bit, and then it generally kind of goes up to its high, comes down to its close, and nothing really special or dramatic has happened inside that bar. We would consider that what we call a no churn bar. That bar has no real information in it to tell us that anything specific is likely to happen next. Now let's look at this bar. So we've got the ticks coming in at a rate that is than the previous bar. Okay, we've got selling and buying and selling and buying, and then a lot of buying, and then selling, and then more buying, and then we get into a churning area where the buyers and sellers are basically getting into a fight with each other. Okay? Very different reading the price action inside. Now, if you look at a static chart, if you're trying to teach yourself how to trade or learn how to trade looking at static charts, you won't have that information. You won't know that there was something very different going on and being manipulated inside that bar. That's where we use our pullback alert to understand that. Okay, so what it looks like on our charts. You see, basically, it's very, we make it so easy to see and understand. And I'll show you this on a live chart here in a minute. But you see these dots, and these dots tell us that there's certain type, relative to previous bars, there's certain type of activity going on inside these bars. So we have what's called a churn bar or a climax bar or a combination climax churn bar. Okay, that's what these numbers mean. We've removed all the shades of so that you know immediately what to expect on the next bar or in the next few bars. Okay, I wanted to let you know we are having an event on Saturday to go and show you the actual trade setups. I'm going to show you some here in a minute, but show you how we trade them and how we practice trading them using NinjaTrader's playback utility. Now, I know a lot of us have tried NinjaTrader's playback utility and are not all that happy with it. Work with it because I have to. I don't have any choice in the matter due to maintain my living. You know, to be able to continue to trade for a living, I can't just show up in the morning for a couple hours and trade and be done for the day. It doesn't work like that. As much as we all want it to, it doesn't work like that. You have to work at it. So I've got this habit of going in and practicing my trading using playback, and I've used it a lot. So I have some tips on how to use it more efficiently and get it to work better for you. It's not perfect, but it helps a lot. Okay, I can reduce the amount of time and struggle that you have with the playback utility a lot. So come join us on Saturday and I'll show you some of the little tricks I've learned. We're also going to show you the trade setup called the Naked Rockstar. That is actually probably the trade we take most often in the trade room every day is our Naked Rockstar trade, and I'll explain all of that to you on Saturday. And even if you can't make it, register, because that means you'll get the video of the event. If you don't register, we're not going to send you the video. All right, so that little dot right there, here, and I shorted it at the open of this bar right here. And I might have gotten lucky and shorted it up here. I don't remember. All right, now, and as I mentioned, you really can't learn anything. You can gain information. I did this. You guys look at your trading charts like this, don't you? Most of you. If you're studying your trading, if you're trying to learn trading, you scroll back to see if there's anything you can look at on a static chart. But you can't learn to trade from them. If you've ever done one, I'm going to help you on Saturday. Oh, static charts. He said you lost it, static charts. I'm not sure where I was when I said static charts. So this is what I'm going to show you on Saturday. You can't really learn how to trade from these charts. Okay, when you're doing this, you can gain information, but it's not going to help you learn how to trade. If you've ever done this and then tried to trade something that you thought you saw on a static chart, you realize how different it is when you try to do it live. All right, so this is one of those things that I've learned over time that you just can't do. The interesting thing is I go to webinars or used to, and watch the guy on the webinar doing this exact thing. He's showing static charts and pointing at things. And you go, oh, that looks really good. That's very compelling. But let's see what it looks like when we do it live. Right? So let me make sure this is working. Doggone it, all of them broke. That's all right. I'll just restart it. Hold on just a second. I did a few minutes ago. On the left, you'll notice no indicators. And then on the right, you'll see that we saw in the trade room. And this was yesterday? Yeah, yesterday. All right, on the 10th. So these are some trades in the trade room yesterday. So I'm going to go through these really so you don't have to sit through the whole thing. Right here we have information. We have a nice hard push. We have condition, and then we have this speed tick that tells us that this is a high probability that this bar is being manipulated. On the open, notice when these indicators print, by the way, they print in real time as soon as the condition exists. Notice it's not there and now it exists because the rate of the orders going through exceeded what we feel like traders could do. Then at the very open of the next bar is where our trade goes. So this was a buy order right here. So I bought this and up it goes. Okay? So that's all I was looking for. This is also from yesterday. This is a speed tick trade setup. Again, no rock star, but because I hit the support line down here, I have the ability to put on a trade right here, and I put on a buy order there, and that ended up being a winner. All right. Notice the pullback alert. This qualified this bar. We have a speed tick, a pullback alert, and I only sold this. We do have a rock star here, but I only sold because of this pullback alert. All right, we were 10 ticks away from this high of the day. So it was the high of the day, and I'll tell you more about this on Saturday. So this made what we call a naked rock star trade, and it only qualified because our volume spread analysis indicator suggested that this was a churning bar, meaning that a lot of buyers, and then getting up in here, the sellers became very active. And then typically that's going to cause this bar to turn, this price to turn, at least in the short term. Okay, all from yesterday. Same thing. This time we got even more, right? We have a hard push up. Look at this big bar. Look at this. This is a climax churn bar. There's a lot of orders being processed, not a lot of orders, but the orders are being processed very fast. At the open of this bar, we have this rock. This is also our Super D indicator right here. I'll talk about that in a few minutes. So I shorted it on the open of this bar. In fact, the bar backed up a little bit. If you get lucky, you can actually short it and get a little bit better price. All right, and down it goes. All right, so those are 4 trades from yesterday. So how did we get here? As I mentioned, we trade pullbacks, okay? Trends are very important to us. So we're all about increasing our odds. We can trade regularly. Now, how did I get to this point? I started by, I had struggled for so long to try to be a trend trader and to try to do everything the way everybody else does, and it just wasn't working. So before I quit, I decided, you know what, I'm gonna try to just solve this like a problem instead of looking for help or looking for somebody to teach me. I'm going to look at this as a problem. And so I just pulled up any chart. Just looked like this. Anything. You just look at it and you go, okay, what's going on here? What's going on this chart that causes price to do something specific? Something that for whatever reason it just seems to stop and change directions. Why? What is happening just before price stops and changes directions? So I felt like this was a good idea to try to approach it this way, to try to figure out what's happening just before. So this is where our indicators came from, including using volume spread analysis. I started measuring what's happening just before price stops and turns. All right, and this gives us a high degree of probability of understanding where these pull back from. So instead of being this guy where I just, you just continually feeling like you're missing it, to this guy where you know that you've got the right information to make a decision from. It doesn't mean you know what the market's going to do, because nobody knows. unless it's the guys that have all the money and the big supercomputers. Okay? We don't know anything for sure, but we do know that we have the best information from which to make a decision. And how do we? We wait until we have all of the best technical indicators together, all suggesting that something is about to happen. All right, so fluence, what is that? For those of you that don't know, it's when different ideas or strategies are used together to form a single strategy. All right, or they're all in agreement with each other. All right, and different indicators are combined to help identify. There's a lot of indicators out there. Oh my gosh, there are so many indicators out there, and I've tried them all. The problem is a lot. They're very difficult to read and understand sometimes, especially how they work together. The ones that give you the most information of your competition. You understand this is a competition, right? When you're trading, you're not trading against the markets. It's a zero-sum game. You're competing with other people that feel like they know something that you don't know, and vice versa. Okay. You want the least amount of effort to understand what the indicator is telling you. All right, so that's what you're looking for in an indicator. So for example, these are all indicators that we could use to get a clear picture of somebody's intentions, right? You see a frown or a mask or a fist or somebody whose shoulders are all hunched up. These are all These could be characterized as indicators, but they're all each just a piece of a bigger picture, right? You don't have a clear picture until all of them are in agreement with each other. All right. So I showed you the speed tick. This is basically order flow analysis. There's some real solid using order flow analysis. Now, do you see anything? There's right here on this chart some good opportunities. Do you see them? Do you know just by looking at the chart? I know there are a lot of people that say, oh, you don't need indicators to trade. Well, maybe not. But what if I add this? Still not sure? What if I add that? Okay, so you'll notice that each time this histogram exceeds this, we get this speed tick. Basically, think of this histogram and these lines as a speedometer. These are the rate of orders being processed through the markets. When we exceed this rate on this lower line, we have a pretty good idea that the orders are being processed faster than retail traders are able. Okay? If we exceed the second line, we know it's going really fast. If we exceed the third line, we know it's probably going faster than a single or at least a couple of the market manipulators are able to do. So we're going to stay out of that because that's like too fast. But we're looking for this exceeding these lines as it's like a speedometer. So it tells us there's a pretty good chance Pacific is about to happen. Now you say, well, I don't see anything very specific. We're looking for a pullback, right? At the open of this bar, we pulled back 26 ticks here. At the open of this bar, we pulled back. This bar opened here. It pulled back. This bar went up here, 15 ticks. This bar opened. It pulled back 22 ticks. This bar opened. It initially pulled back 16 ticks. All right, this is what we're looking at. These are the opportunities. You just scan across charts and you're just looking for something, you're missing this. But it's there and it's right in front of you and we see it every single day. These are opportunities that a lot of you guys are missing that's right in your face. All right, divergence. Divergence is huge for us. Divergence is when we really started, this whole system started to solidify. And for those of you that don't know, divergence is when we're measuring price against some sort of momentum oscillator. They're in agreement with each other. It's very typical. When they get out of agreement with each other, that's when we have a divergent condition. And just so you know, when price and momentum get out of sync with each other, momentum typically leads price. Okay, so we're very interested to know that we have a divergent condition, meaning we would expect here that price is going to drop, and of course it did, but that's what we're expecting in a divergent condition. Okay, so we added that. Now, why don't more people use divergence in their trading? Because typically you're going to see indicators that look like this, and they're really hard to read and understand, and chances are you're going to miss them a lot. So instead, we just do this. That I showed you that on an earlier slide. We just do that. We just put it right on the open of the bar. That one oscillator that we're measuring suggested we had a divergent condition. This one had 6 oscillators that we're measuring. This one had 2 oscillators. Okay, so we have 7 different oscillators that we're measuring against price for divergence. Okay, and those oscillators are here, and they'll light up when they are active. And to tell you which oscillators were divergent. Okay. One of the most simple things that there is out there, and that's overbought, oversold, and it's one of the most powerful things that we have, because prices are oversold for an extended period of time. So as soon as price gets overbought or oversold, it's generally going to want to pull back inside between the and basically kind of channel here. When it gets overbought, then we have a good chance that it's going to try to pull back and stay inside here. Okay, now this is all well and good, but you have to have this on your chart, and you have to keep looking, and you have to keep looking to make sure that you're not missing something. So instead of that, needing this oscillator, we just put it right on the candlesticks, right there where you're already looking, so you know this bar is overbought. And during the life of this bar, when it becomes overbought, that's when this thing lights up. Back. Connor said I need to go back. You lose me. There. Okay, so you'll notice that when price gets overbought or oversold, we're going to put that right on the candlesticks, right where your eyeballs are looking, on these outlines. So we don't need all of this. And this is extremely powerful because price is going to want to pull back inside these extremes to become overbought or oversold. So non-correlated indicators is what it's all about, meaning that the data from each of these indicators is collected from a different source. And these sources are generally other, yet they are all in agreement that something is likely to happen. So let's go back to our indicators. An indicator can be an intention, but just one. Do you know this guy's intentions? I think that's Bill Clinton. Do you know his intentions? This guy's wearing a mask. Because he's wearing a mask, do you know his intentions? This guy's got a fist. I think that's Bob Dole. Do you know his intentions? Not really, but it might give you pause to look. But let's put them all together. Okay, we got a mask, we got a frown, we got hunched up shoulders, and we got fists. With the confluence of these indicators, now we know we have information to make a decision. What are you going to do now? Okay, I'm not going to get, if I know I have the ability to run, you know, I know this guy's intentions now because these confluence of indicators, and this is all we're looking for. So we came up with a new indicator by combining several of our other indicators. All right, so we've got our what we call our Rockstar indicator now, which is also a trade setup. And that's a confluence of conditions that often precedes price direction changes. Okay, it's very important. Now, this is how it looks when we measure those conditions. We have our OBOS indicator, have our speed tick, and we have our super D. And with all of those combined, that gives us our Rockstar indicator. All right, and you have the ability inside to change the parameters of each of these indicators to generate a Rockstar signal at whatever point you decide to, you know, that you want to. Any of these indicators can be disabled inside this indicator, or you can only have, maybe in the trade room, we only use 3 of the different divergences. Even though there's 7 that are being read, to generate a Rockstar, we only might want to use 4 or 5 or all 7. For OBOS, we have 6 different oscillators to determine overbought or oversold. We only use 1, but there are 6 different ones. There are different threshold levels on the speed tick. We use 1 and 2. Right? But you have all of this ability to customize the Rockstar for whatever market you're trading, or whatever type of trading you want to do. Or you trade along with us and you trade that I'll show you on Saturday, but maybe you want to be slightly more or slightly less conservative than we are. And you can do that by tuning the indicators and tuning your rules. All right? All right, so this Saturday, we're gonna go over the how we use volume spread analysis to qualify this naked Rockstar trade setup, and then I'm going to show you how to using the playback utility. Now, even if you're not interested in these trades that we take, and you feel like you're well on your way to being a successful trader, or you're already a successful trader, and you don't need this, you still might want to show up if you're struggling with the playback utility and pick up some. All right. So we've got a special offer here. We've got our Einstein Bundle. Our Einstein Bundle is basically a one and done type bundle, okay? Meaning it's everything we have, including this first item here. All future indicators that we develop for the trade room, you get for free. So you get the Rockstar and all of the other indicators that we use. You get unlimited trade room. You get our fast forward training program. You get our weekly group mentoring sessions. We have another utility called our Essential Add-on Suite that you get for free. You get the Market Replay Data Downloader for free. And you also get priority support. So basically, this is our one and done. And by far, it's our most popular package, which is why we offer it most of the time in these events. But we do know there are people that aren't just quite ready to jump in yet. You're still maybe playing around with some other options or some other things that you believe in, but you want to give this a try. So we do have some other options. We have what's called our Scholar Bundle. So you'll see that the Scholar Bundle has a lot of the same stuff that the Einstein does, but it doesn't have our Super D, a ricochet indicator, and none of the other perks down here. We will get, right? And that's only $19.89. If you want to just kind of stick your toe in the water, maybe you want to do the Brain Boost Bundle. And you can see the items that are included and the items that aren't included, and you get 2 weeks in our trade room to kind of get up to speed and see what we're all about. All right, so once again, I apologize for the microphone. I hope it wasn't too horrible. Connor only stopped me a few times. I'm sure Connor answered most of your questions. But do you guys have any questions for me? The VSA indicator is the pullback alert. That's this one. That's this one here. There's actually 5 different types of price action inside the bar or volume action inside the bar. The trade room, we only use 3 of those, but there are some a couple of others that we don't use, but some other people may find useful. Any other questions? I have like oh shoot. I have about 10 more of these trade setups from last week that we're going to go over on Saturday. And I'll show you why each of these on Saturday, I'll show you why each of these qualified as a trade setup in here to show you that it qualified, but it was not a winner. Big blue speed tick. Remember I told you in the speed tick if it exceeds that third line. So this was not a trade, and notice how it kept dropping. We'll go over these more on Saturday. Any other questions? Questions? Well, Connor did an excellent job then, as usual. Well, appreciate you all coming today. And I really hope to see you guys on Saturday. That'll be at 11 a.m. Eastern Time. We're going to go through this same stuff, but in a little bit more detail, and teach you how to use the playback utility for your questions, so that if this is something that you want to consider, you'll have all the information you need to make a good decision, which is what we're all about, is providing the best information to make the most qualified decisions, whether it's getting involved with us or your trade setups. You got to have the right information to make the most qualified decision that you can. So we're here for that. Thanks again for coming, everybody, and we'll hopefully see you on Saturday.